Good morning. It's Vijay here. Today is Wednesday, the 12th of June, 2024. Before I start my commentary, I would like to express my heartfelt sadness to the family of my very close friend, Mr. Sajan Abraham, who has been my friend, philosopher, and guide for the last 30 plus years. He was also my client since 1993. So it's about 31 years. And we discuss stock market every day. Even yesterday too, we discussed, and I was looking at his portfolio, and we were wondering what to do in the volatile market. So it's one of those really sad days for me because I lost a very, very dear friend apart from losing a valued client. So my heartfelt condolences to the family. So let's come to the business part of the commentary. So today I have titled it as block deals. Now, if you have been a keen student of the markets, you would have noticed that number of block deals are happening between the promoters or between the PE funds, and they are offloading it onto the Indian market, and the DIIs are buying it left, right, center. In fact, this has almost become like a scam where if the promoter or the PE fund wants to exit, the operators jack up the share a week before, and they sell it almost at the highest level. So, for instance, yesterday we saw two major block deals. That is Indigo, which was about 3,700 crores, where the management offloaded at the highest rates. Then the other one was IRB Infrastructure, which was another large block deal of 2,656 crores. So between these two, the total was 6,356 crores. Now, who has bought it? It's bulk buying by the mutual funds. In fact, Mr. Samir Arora, an experienced fund manager, says in his 30 years of experience, he has never seen mutual funds being so excited to buy, to do block deals at the highest prices. So it's a win-win for the mutual fund as well as the operators, as well as for the promoters or the PE funds. Who is the loser? The loser is the people who believe in mutual funds and believe that the mutual fund managers are really the fiduciaries, and they give their money on a regular basis through either SIPs or through direct investing or through the mutual fund distributors' advice. At the end of the day, what happens is their funds are saddled with these stocks at the highest prices. Not that these companies are bad. It is just that what is the price you are will should pay for a particular company. So even a good company at a bad price becomes a bad investment. So that is what is happening for the last few months, and the frenzy is increasing. So while there is celebration that mutual funds are getting in huge amounts of money, the huge amounts of money is being diverted to block deals. So if mutual funds claim that they got 20,000 crores last month, so between these two block deals on a single day, 6,500 crores has gone. That is one third of the entire month's inflows have gone into these two block deals. Now, yesterday, the numbers show as if that the mutual funds have bought only 3,500 crores, and the FIs have sold mutual funds have bought 3,100 crores, and FIs have sold about 113 crores. If you look at it at the aggregate, nothing seems to have moved. But what has moved the needle dramatically is the 6,600 crores which has been bought by the mutual funds, which and the FIs, of course, which will mean that the institutions were actually net sellers of a very huge quantity yesterday, about 3,500 crores net sellers by the institutions, which is masked by the buying on these bulk deals. So, as a mutual fund investor, I'd be very careful in which fund houses I want to invest. So once you come to know, we really don't know which mutual funds have bought, but we know it cannot be the retail investor who has bought this kind of quantity. You also know that some operators' names also come there. They also have sold with it. So this is a game which is being played. It is legal, but it is immoral in my opinion, because the fiduciary duty of the mutual funds is not happening. So yesterday, the Nifty almost went to a new high, but it fell down because of selling, and probably because of selling by the institutions. Same thing with the Bank Nifty. It opened lower and tried to go up and then came back and closed in the negative. So today, you see again, Gift Nifty talks of some drop in the opening. We really don't know. We can't trust Gift Nifty too much, but there is overhang of supply at higher levels. So this market will find it difficult in many stocks for it to really go up to new highs. But the mid cap and small cap and micro cap are going up because there are the funds flow are going into these funds. But it doesn't mean that a micro cap fund should not own Reliance. There are many micro cap funds which are owning Reliance. So therefore, one has to be very cautious at this juncture, because what I'm seeing today, and when Mr. Samir Arora, a veteran, has pointed out, it means a huge distribution is going on. So sooner or later, this distribution will show it in lower prices. So today we live in a very strange world where one stock can move the index in not only in India but in US. Apple went up by 7.5%, which is simply amazing. All that they did was they said that they are going into AI. So anybody says that they'll go to AI, the stock prices go up. And Apple is one of the largest market cap stock, and 7.5% it moved the Nasdaq, which went up by 150 points, and S&P, which moved by 14 points. The Dow was down at 300 points, down at one time, primarily because the banks have been downgraded in the US, but Dow also recovered to close at minus 120 points. Today is the Fed meeting, so you will get some thing to chatter about after our market closes. It also is the CPI reading, which comes in the evening before the US market opens. So that may dictate what will happen tomorrow. But today's market may be lackluster, but you never know. If there is some bulk deal or block deal in the offing, those stocks may shoot up. So recently we saw block deals in many stocks, including ITC, which was of a 17 to 20,000 crore block deal, and these mutual funds lapped it up, which means the whatever they got in 1 month was exhausted in a single day. So that is the status. Then the dollar index is above 105. The oil has gone up above 82, which is a cause for concern for the emerging markets, especially India. Nikkei is down 300 plus points. Hang Seng is down about 250 points. Silver and gold are flat. Commodity complex is down. So generally, the commodities are down. The oil is rising. Oil was the one commodity which was not rising when the commodity complex was rising. But today that has changed, and changed for the worse for us. So that's all as far as we are concerned. Today is also the Bank Nifty weekly settlement. So you can expect injections from people like this Jane Street, which they did yesterday. I'm sure the injections came in at 2 o'clock. So watch out for between 2 and 2:15 when the injections will come. And don't be surprised if you get an injection in Bank Nifty today between 2 and 2:15. So whatever you do, hope it's a profitable day. Thank you for joining me here. It's Vijay signing off.